Hey everyone, John Henry here, slingshotfutures.com, and welcome to the daily futures and crypto market outlook for tomorrow's trading, and that's going to be for the 3rd of the month, going in on our way through November already, and starting off with an okay start. Relatively bumpy and kind of choppy, sloppy, and sometimes a little bit slow, but we do have enough volatility to at least give us some opportunities throughout the day, so I guess we have to be thankful for that. Now going in, before we jump on into all the markets, make sure to swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. From here, you'll be able to sign up for our newsletter so that you'll be notified every time one of these videos comes out via email. And along with that, in the email itself, we go over different stocks, cryptos, and things of interest to keep your eyes on as well. So it's a great newsletter to get your hands on if you haven't signed up already. Along with that, make sure to sign up for our free 3-day trial in the live trade room by clicking the live trade room subscription and trial info link, and that will allow you to kind of hang out with us for a couple days, well, 3 days to be precise. You'll be able to see our charts, see the trades, see how we're managing the markets, how we're analyzing the markets. Just a good way to hang out with us for a couple days and see how we do everything from day in and day out and how we approach the markets. Now, jumping on over to the markets. First off, the euro. The euro is catching a nice push up, but it did end up being a failure. Now, this is something that we posted on Twitter. If you haven't followed me yet, I post a lot of stuff on Twitter, so make sure to follow me on there if you haven't already. That's at Slingshot Future. Couldn't fit the S. Slingshot Future, and you'll find me there on Twitter. Now, we were talking about this area here where we're pushing into a couple different things. First of all, we have a major level of resistance, which is pretty obvious. Doesn't take a microscope to figure that one out. And when the buyers tried breaking higher, we tested the earlier level of support, this green line here, and that also is the 38.2 just a little bit further down. So again, those stacked levels of resistance. Now, if we zoom out, you can see where that level of support came from all the way back in mid-August, and we're now testing that as resistance. So multiple levels stacking up in the same place, including Fibonacci sellers, and that allows a lot of traders to try to jump in and drive the market lower. Now, a couple things we do have. First of all, we could widen this bottom out a little bit here, and that gives us a potential rising level of support that sellers are going to be gunning for in terms of targets. And if we try to copy this on the highs, you'll notice that they just kind of missed it. Just a little bit. They missed the highs. Now, that little bit of a miss isn't that big of a deal. You know, something like this, if it were to turn around, that would be a much bigger deal. But they are missing the highs, and that's showing a little bit of extra weakness kind of playing behind the scenes for the buyers as well. We are still in a bull trend. We still have rising support in the way, so you have to be a little more conservative in terms of profit taking. But we are showing some signs of failure up here with the buyers unable to continue to drive up, get to the highs of the channel. We're bouncing off of major levels of support that have turned into resistance, and it seems like the sellers have their eyes set on the lows once again, or at least an attempt at the lows. Major objective to the downside, aside from the rising level of support, is going to be at around 16,410, and then we're looking for the overall lows after that. So plenty of room for the downside once we can start cracking through these levels of support, and it looks pretty good at this point in time. Over on gold, gold is still cycling back and forth between those levels of support and resistance. I have widened out the resistance high by just a couple, up to 1281.4. The lows of support are at 73.7, and they look pretty good there. You might be able to, tighten them up just a little bit to maybe 74, but a 3-tick difference is going to make a big difference, in my opinion, at this point in time. We are still grinding higher, and we're grinding, I think, is the best way to put it, really. We are just grinding higher. They are slowly making new highs, and those new highs really aren't proving a whole lot once it makes it up there, because it immediately pulls right back again, and that's where that resistance at 81.4 is coming from. The overall trend is definitely bearish. We still have this nice trend working its way down, and this looks like a halfway decent two-legged correction, which you very commonly do see in a nice bear trend. I'm sure a lot of Elliott wave traders are probably starting to pick up on this as well, and we are adding a lot of bear emphasis to the downside for selling pressure lower. Now, looking at 1281.4, that's an obvious area of interest, but notably, if you're not looking for an average area of resistance, we are looking at these highs. Every time we crack a high, it seems to fail back pretty aggressively, and that's been going on since the 30th. So because that being the case, I would much rather look for a high break and then looking for selling pressure above that, assuming that any breakout that happens, even if it closes above that, is probably going to fall right back down the following hour afterward. So looking for selling off of the highs and driving the market down. Major intermediate support, I guess, is the best way to put it, at 73.7 at those lows of the range, with the overall objective back down to the lows. And again, front running a little bit up to 66 or 67 makes a lot of sense, just so you don't have to deal with this downside whip. On crude oil is in a very interesting situation, and not something that we see very often, is a Fibonacci extension. Now, Fibonacci extension, the traditional Fibonacci is drawing from a swing low to a swing high or vice versa, and you're looking for price to respect a retracement and then push back up. A Fibonacci extension, though, is where you have the market, I'll stick with the black screen, you have a market working its way higher, but it's so aggressively high that then, instead of drawing off of the swing lows, it's much more sensible to be drawing off swing high to swing high, and it gives you a slightly more aggressive buying area that's a little bit further up. And that is holding so far. That aggressive buying area is at 54.04, and it does appear as though the buyers are responding to that very, very well. And that's going from the swing high, right? Not your normal fib, but it is something that does occur on strong breakout moves, and I would definitely classify that as a strong breakout move. So it does appear as though the buyers are holding that area. We do have a little bit of an intermediary level of resistance here at 54.46 coming across the highs. They held it up a little bit, now we're back again. We're just kind of getting stuck around here. So as long as we're around 54.46, I'm going to be a little bit concerned for continuation. Might be a little more difficult than normal. If they can start breaking above that, then you're looking for an easy breakout pullback mode back to the highs at around 55.22. So we are holding that area of support, and the line in the sand right now that I'm looking at is 54.04, and that does also line up quite nicely with the bottom of the rising kind of expanding megaphone bottom too. So if we can get one more pullback, wouldn't necessarily be a bad thing. And then wrapping up on the S&P. Now, the S&P overall is holding a 50% pullback. They do have that going for them. And along with that, multiple stacked levels of support. You know me, I'm a big fan of those. We have congestion back here, swing highs, swing lows, swing lows, swing lows. You guessed it. We also have the 50% at the same place. So 25.63 up to 25.64 and a quarter. I mean, you could just figure that point range inside of there is going to be fairly decent in terms of levels of support or resistance. And that's really what I'm looking for in this kind of zone that they're creating. The buyers are still holding it very nicely. They're bouncing off of it, and every time the market dips down to this bottom, the buyers smash that thing right back up again. And with that huge amount of buying volume, well, we can't really ignore it, can we? So looking for any dip to the bottom and assuming that the buyers are just going to pick that up as well, and I have every reason to believe they will. So any dip that we can get on the S&P down around 63.5 is going to be fair game for a potential lift right back up. Major objective, of course, for the buyers is going to be back to the highs again. I don't think the highs are done, but we are kind of stagnating a little bit, and I would consider that healthy in this case, just because the index markets as a whole have been rocketing higher, taking, from Bitcoin, which we'll get to in a second. But in order to maintain this rocket ship, they need to pause for a minute, right? They have to pause, refuel the ship, and then launch again. You can't just keep burning the thrusters out, otherwise you're going to run out of gas. And it looks like that's the case right now. They ran out of gas, and now they got to refuel, so trying to buy as cheap as possible makes a lot more sense right now in this current market sentiment. That's going to do it for the outlook. Now, taking a look at the news for tomorrow. Tomorrow is a Japanese holiday, and that's going to be Culture Day. Japanese holidays tend to show that the markets get a little bit kind of slower, grindier, but not as big of an impact for us in the U.S. session. It'll have more of an impact on the European session. Tomorrow morning at 5:30 out of the UK, we have the services PMI for October forecasted at 53.3. At 8:30 out of the U.S., we have non-farm payrolls. 310,000 is the forecast for that. The previous was only a negative 33,000. Also at 8:30, we have the unemployment rate forecasted at 4.2%, which is unchanged from the previous. So big U.S. news tomorrow with the non-farms and unemployment rates. At 8:30 out of Canada, we also have the employment change for October. They're forecasting 15,000. Previous was 10. At 10 o'clock, we have the ISM non-manufacturing PMI for October, forecasted at 58.5. Likely not many people are going to be paying attention to that, considering non-farms are coming out at 8:30. Non-farm days tend to be a really crazy one, so you got to be careful when you're trading around those non-farms. And a lot of times it ends up being early in, early out. Get that profit, get those trades off the table, and then call it a day, call it a weekend, and head off on your way is usually the safest approach. Now, looking over on the cryptocurrency side of things, Bitcoin. Oh man, Bitcoin. We were talking about wanting a pullback. I would really love a pullback now. Still just an absolute monster to the upside, and they have definitely got plenty of fuel in the rockets, right? Just a gargantuan rally to the upside. Highs were made, if we zoom in a little bit closer here, the high was made at 74.45. So 74.45 being the high, and then the lows after they hit those highs pulled all the way back down to around 67.70. Lots of whip up here at around 7,000. Now, we still have yet to get that quote-unquote healthy pullback, right, that we like seeing, kind of like what we had back here in mid-October. We haven't had that yet, and we are getting a little parabolic up here. Now, I'm never a big fan of saying that, you know, we should see a pullback sooner than later on Bitcoin, because I love it going to the moon. But in order for this to maintain its health, it would be a good thing to see a pullback. Now, that doesn't necessarily mean that it won't stop going up. That's what we were talking about yesterday. You know, Bitcoin, we're talking about wanting to see a pullback and it rallies up through 7,000. But overall, I think, again, to maintain the health of Bitcoin as a market, it would be a good thing to see a pullback. Now, one thing that could be causing this lift higher, if you haven't heard already, the CME is announcing plans to launch Bitcoin futures. So for you futures traders out there, you might be able to get your whistle wet when you're talking about Bitcoin. It looks like they're going to be trying to add that by the end of the year. So look for that coming out of the CME, and likely a lot of why we're seeing such a massive rally that is slightly overextended. Not to mention the fact that, well, it's Bitcoin and this is what it does. Now, again, with this big blow off on the highs, that formed a monstrous hourly candle. And whenever you have these big bars like this, the highs and lows of those candles become major areas of support and resistance. Obviously, my eyes are going to be set on the lows because I'm looking to buy pullbacks, but 67.70 and 78 cents or so is the low of that candle, and I would love to see some buying pressure around there to bounce the market right back up. You'd probably, just off the initial bounce, be able to pick up an extra couple $100 off of that. But looking for a little bit further movement down, the next area of support's at 66.52.52, and that also lines up multiple levels, you know me, multiple levels of support all coming into the same place. We have the earlier channel, earlier wedge, major horizontal support, secondary major horizontal support, and they are all clustering together in this big band right around 6,700, and that looks like a bullseye for a kill zone to the upside. So looking for the mark to pull down, hit it, and rocket back on off on its way, and, you know, maybe we'll see 8,000 sooner than later. We'll have to wait and see. Over on Bitcoin Gold, we did get that overcorrection, worked out absolutely beautifully, bounced off of support that we were talking about at 117.26 and led into a beautiful $15 rise or so on price. Just a great little lift right there for some short-term scalpers to be able to take some profit off, and longer-term traders, well, you know, again, Bitcoin Gold is still a fairly new coin. It hasn't really kind of defined itself in terms of how the market really wants to respond to it. So I think long-term's a little bit more difficult, but short-term, there's definitely a nice play there. The overall objective for Bitcoin Gold now is for continuation back to the highs and retest at around that 155, 160 area. On Ethereum, we have a strong dip down into major support that is still holding at around that 78.6%. That's at 283.25 down to 278.35. And this zone inside of here that this is creating is a major, major level of support. This is a long-term level of support, something that's been in the works for a long time here on Ethereum, since really the beginning of October. And even then, you could zoom out a little further and say, well, they've been bouncing off of these levels since August. And even if you go further back, now you have June in the market here too. So this is no joke in terms of support or resistance, and we are bouncing off of it again. So long-term buyers are definitely going to be looking to scale in here on these dips, and anything underneath that price is going to be considered on sale more likely than not. So Ethereum, while it's cheap, is looking pretty good for another lift. Litecoin, it did catch that big dip down to $50.37. Beautiful bounce off of support there. In terms of the 786, we're not really respecting it a whole lot. Arguably, it's pretty much off the table. Now, we still have the line in the sand. That hasn't changed. And we have the wedge that we're breaking out of into major longer-term support. And if we zoom out, once again, same thing with Ethereum. If we look at these levels, they look good right now, but they look even better when you start going backward a little bit and realizing how often they have respected this zone between $48 and $50. It really has not messed around when it's come into that area, and that's something that we need to be paying attention to. And guess what? We're pretty much right on top of it right now. So looking for a little more continuation on Litecoin off of those lows. 50.37 just worked out phenomenally well for a bounce back up, and I'm looking for that to continue up to around 56.04. So that's going to do it for the main coins. Now, some really cool news that we have here. I retweeted it on Twitter, but Metaverse, our favorite coin, ETP, aside from ADA, of course, but ETP is going to be listed on HitBit, or HitBTC, or HitBitcoin, whatever you want to call it. I call it HitBit. They're going to be listed tomorrow, November 3rd, and likely every time we've seen a coin, a relatively popular coin, and Metaverse is definitely one of those, get listed listed on a big exchange like HitBit or Bittrex or one of the other ones, you typically see a pretty decent lift. We might find ourselves back at $6 by the end of tomorrow, depending on when this launches. But either way, we are going to be looking for Metaverse ETP to be launched on HitBit tomorrow on November the 3rd. Now, along with that, going on to ADA. ADA is also catching that steep drop lower. They're not going to be announced on any new markets yet, but they have put it on a low at around 250. That's about half off from where we were talking about it back at 500. And again, I am a long-term hodler of ADA, so I'm looking at this as a phenomenal sale price. And 250, half off. I can't really resist a good half-off deal. So around 250 is going to be another area that I'm looking for potential longer-term holding. Aside from that, Bitcoin Cash really hasn't done a whole lot, still stuck in the same range. And a lot of the other normal culprits, NEO bouncing off the lows at 23 up to 26 as expected. Beautiful bounces all over the place. NEO is very predictable lately. Still haven't gotten that pull down to around 1823, but aside from that, all else stays the same. So pretty much same across the board, but the big one that I'm going to be watching tomorrow is definitely going to be ETP going onto the HitBit exchange. We'll see what that does to prices tomorrow. But either way, that's going to do it for today. So like we always say, doesn't matter what market you're trading, make a plan. You need to make a plan. Trade that plan, follow those rules, and you'll be A-okay. Until next time, we'll see you all then.